What is going on, everybody? Welcome back to Daily Trade Guy. I'm really glad you're here today because we have a massive earnings event to break down. Today, after the market closes, Palantir Technologies reports its fourth quarter 2025 earnings, and this is one of the most anticipated reports of the entire earnings season. We're going to dive deep into what to look for in this quarter, what the channel checks are telling us, what's happening on the government side, on the commercial side, what the competition looks like heading into 2026, and most importantly, what it all means for the stock. This is not your typical 5-minute surface-level recap. I've spent a significant amount of time going through independent channel partner checks, system integrator feedback, public filings, analyst reports, all of it. So buckle up, there's a lot to cover. And if you're new here, this is what we do. Deep, research-driven breakdowns of the names that matter most. So if that's your thing, stick around until the end. Let's get into it. Before we get into the quarter, let's set the stage with where the stock actually sits heading into the print tonight. Palantir closed Friday at around $147. That's down roughly 29% from its all-time high of $207 back in early November, right after the blowout Q3 report. If you zoom out, the stock returned 340% in 2024 and another 135% in 2025, making it the single best-performing stock in the S&P 500 2 years running. But the pullback over the last couple months has been real. We're down about 19% just in the last month. This is a stock trading at a forward PE of about 145, which is significantly above the software industry average. The analyst community reflects that tension. You've got 27 analysts covering this name. Only 3 have a strong buy, 5 have a buy, 16 are at hold, 2 are underperform, and 1 is a sell. You've got the most bullish names like Wedbush at $255, and then on the other end, you've got RBC at $50, which just last week flagged what they called a bunch of red flags. So the setup is clear. This is a polarizing stock going into a make-or-break print. The options market is pricing in roughly a 10.5% move, but historically, PLTR tends to move even more than that. So be ready for volatility tonight. All right, let's get into the actual numbers Wall Street is expecting tonight. The consensus estimate for revenue is around $134 billion for Q4. That would represent over 60% year-over-year growth. EPS is expected at roughly 23 cents adjusted. Now, to put that in context, let's quickly recap what Q3 looked like. In Q3, revenue came in at $1.18 billion, which blew past the estimate by over 8%. Adjusted EPS was 21 cents versus the 17-cent expectation. The Rule of 40 score reached 114. That's 63% revenue growth plus 51% operating margin, which is elite by any software standard. So Q3 was genuinely exceptional. And now the question is, can Q4 sustain or even accelerate that momentum? Now, this is where it gets really interesting. I've gone through detailed channel partner feedback, both from a channel sales partner, or CSP, and a major system integrator. Starting with the CSP, they believe Q4 year-over-year growth actually accelerated compared to Q3. Their view is that Palantir continues to see strong momentum, especially in the US business. The system integrator feedback is even more bullish. They're describing year-over-year growth in Q4 approaching 100%, with quarter-over-quarter growth continuing to climb. So putting it together, both channel sources are saying growth re-accelerated in Q4. Based on this, there is a high probability of a material beat relative to the upper end of guidance. Now here's the thing. With a stock at this valuation, just beating Q4 estimates may not be enough. What the market is really going to key on tonight is 2026 guidance. This is probably the single most important number that comes out of this earnings call. The CSP believes Palantir can continue delivering accelerating growth into 2026. Their expectation is that initial guidance will probably come in conservatively at around 40 to 45% revenue growth, but there's potential upside to 55% if execution stays strong. There are some important caveats, though. Palantir's revenue base is now materially larger. We're talking about $1 billion per quarter business now, so maintaining the same growth rates mathematically gets harder. Let's shift to the government business, which has been the bedrock of Palantir since its founding. On the US government side, Q4 revenue should be very constructive. And the contract wins keep stacking up. In December, the US Navy awarded Palantir a contract worth up to $448 million. We also had the $385 million VA contract and continued Army Vantage deployments worth up to $620 million. Management has been talking about Palantir's role in building what they call a new US military-industrial complex. And that ecosystem keeps expanding. This is a massive and growing total addressable market. Now, the commercial side is arguably more important for the long-term growth story, especially US commercial, which grew 121% year-over-year in Q3. In 2026, Palantir's partner strategy is evolving. They're integrating customer success and architecture into a unified system. In Q3, they expanded partnerships with PwC and Hyundai in South Korea. International commercial is where the challenges remain. Europe continues to face structural headwinds. There are strict data sovereignty laws and political distrust toward US platforms. One partner noted genuine suspicion in the public sector. This is the part of the analysis that I think is most underappreciated by the market. Competition is expected to become much more visible in 2026. First, AI labs like OpenAI and Anthropic are moving into enterprise applications. Second, data vendors like Databricks and Snowflake are embedding AI capabilities. Palantir leads at the agentic layer, but the gap is closing. And here's the budget dynamic that concerns me. Previously, a large portion of AI spend might go to Palantir. But now, that same budget might get split $30 to $40 to Palantir and $60 to $70 to infrastructure providers. All right, let's bring it all together. Here are the 5 things I'm watching most closely when the numbers drop tonight. Number 1, revenue beat magnitude. Number 2, 2026 revenue guidance. Number 3, US commercial growth. Number 4, commentary on competition. And number 5, government contract pipeline. So here's the bottom line heading into tonight's print. Palantir has beaten estimates for 21 consecutive quarters. The question isn't whether they beat, it's by how much and what the forward outlook looks like. For the bulls, this is the premier AI platform play with government-grade security. For the bears, this is one of the most expensive software stocks on Earth, and any stumble could trigger a sharp repricing. That's it for today's deep dive. If you found this valuable, do me a favor and smash that subscribe button. Good luck tonight, whatever side of this trade you're on, and I'll see you in the next one.